Dawn Sparrow. I'm with iTech Real Estate Services, and I'm so happy to introduce my lender, Kent Barker with First Class Mortgage, and we're going to talk about reverse mortgages today. We hope to answer some of your questions because what I get from people is, why would I want to do a reverse mortgage? So, Kent, why would anyone want to do a reverse mortgage?
Well, why would anyone want to do a mortgage, period, right?
Good question.
Who wants a mortgage? Nobody wants a mortgage. They just want a house.
That's right.
You know, if they can get it without a mortgage, even better.
I love that,
Yeah.
but that's not the real world.
That's not the real world. So, as a mortgage loan officer, our job is to educate consumers. And we want to educate them on all the different loans out there. So you've got VA home loans, you got FHA loans, you got conventional loans, USDA loans, and there are HECM, HECM, or reverse mortgage loans out there. And most people are not familiar with those loans because there are some age restrictions. And until you reach that age, you don't even know about them. And the little people do know about reverse mortgages is hearsay. There's a lot of misconceptions out there about a reverse mortgage.
Are they scared of them because they've heard bad things?
They've heard some bad things in the past. Maybe they're scared of them, and they think the bank's going to come take their house. A reverse mortgage is safe, and it's just like any other loan out there. There are some qualifications for it, and there are some benefits. There are some risk in all different types of loans.
Well, let's talk about some of those. So, what is the risk?
So with a reverse mortgage, unlike a traditional forward mortgage, a reverse mortgage, you're still going to get a monthly statement. You're still going to have the opportunity to make a house payment or not make one. And the biggest risk with a reverse mortgage, just like a traditional mortgage is going to have a risk, if you don't pay the taxes and insurance, you can lose your house.
That's right.
With a traditional forward mortgage, if you don't pay your mortgage payment, you could lose your house. A reverse mortgage doesn't have that risk. So in all reality, a reverse mortgage has less risk than a traditional forward mortgage.
I love that. That's awesome. So who can qualify for a reverse mortgage? Can anybody?
So again, a reverse mortgage has some different qualifications, but it also has less qualifications than a traditional forward mortgage. Most FHA insured reverse mortgages are going to require that the borrower is 62. Now that doesn't mean both borrowers in a house, if you have a married situation, have to be 62. At least one borrower has to be 62 to qualify. Now there are some private lenders out there that do offer reverse mortgage loans that you can qualify as at an early age of 55.
Oh,
and so
really?
So there are opportunities for those that maybe are younger that could benefit from a reverse mortgage.
Okay, I have to stop you right there. I'm so excited. So I have a client that is in a divorce situation. She is 57. So could it help her?
So it's possible, yeah. And again, as a mortgage professional, a loan officer, our job is to educate consumers on all the different type of loan programs. It might benefit her, it might not. We don't know that until we look at their situation, run the numbers. The nice thing with the reverse mortgage, we don't look at credit scores. Unlike a traditional forward mortgages, you're going to pull your credit and you got to have good credit. Reverse mortgages, we're looking at payment history, we're looking at income, because we do need to have an income source still to qualify. You need to make sure that you have income to pay your taxes, pay your homeowner's insurance, continue to maintain the home, but there's not a house payment requirement. So for qualifying, you qualify easier for a reverse mortgage than you would a traditional forward mortgage.
That's amazing.
So there are some benefits there.
I'll get you that name.
So yeah,
when we're finished here.
So it's good to know all your options as borrowers.
Yes, it is.
One of my very, very first clients that I helped with the reverse mortgage, they were both retired using their Social Security income, very limited income at that for most people on Social Security only.
Yep.
And they were using that limited income to make their house payment. They'd been in this house for 50 plus years and still had a house payment on it. and they were using that income to pay it. I helped them eliminate that house payment. And the very first thing that the gentleman did is he went on a trip to Alaska caribou hunting. 2 weeks to Alaska because he couldn't afford it, but that was in his dream to go to Alaska caribou hunting. Now his wife, on the other hand, didn't want to go to Alaska, so she went to Hawaii for 2 weeks.
Oh, good.
And they both got to enjoy more of their retirement. The neat thing about this couple is 15 years later, they had their children move in the house. We put them on a new traditional forward mortgage. They're still living in the home. Their children are there, took over a forward mortgage, and the home had gone up in value way more than the loan had gone up. And so it was a great opportunity for 15 years to eliminate that need for a house payment. And they were able to enjoy those 15 years of retirement a lot more so than scraping by making a house payment every month.
So what I'm hearing you say is it is really a very safe option.
Extremely safe. In my opinion, it's one of the safest loan programs out there. A traditional forward mortgage, you stop making your house payment, the foreclosure proceeding will start. With a reverse mortgage, the equity in your home is making your house payment for you. And there are some safeguards and guarantees that you can never owe more than your home's value. So there are some benefits to that. Now there are some costs because of those benefits. It is an FHA insured loan, and so there is monthly FHA insurance and an upfront mortgage insurance, but the equity from your home will pay for that. So again, there's no cost to you as a homeowner to keep your house other than paying your taxes and homeowner's insurance.
So what if I want to sell or downsize or upsize? Can I do a reverse mortgage again?
Yes, great question. A reverse mortgage, again, is a loan. You can refinance a reverse mortgage. You can sell the house and pay off that reverse mortgage loan. And a great example of that is I had some friends of mine that did a reverse mortgage over 20 years ago. And, well, not quite 20, but close to 20 years
Close
now.
enough.
Yeah. And the value of their home continued to increase greater than the interest rate on their home. 20 years later, they decided, you know, we need to downsize. We don't need the swimming pool, it's too much work. They sold their house, they paid off their RV and all their toys, you know, that we like to enjoy in retirement.
They're big boy toys.
Yeah, the big boy toys, so they have those. And they bought a nice single level home, and they were able to use the equity from the sale towards a down payment on their reverse mortgage purchase and eliminate a future house payment. So even after 20 years, there was plenty of equity in the home to buy a new house and continue the remainder of their years in that home without the need for a house payment.
So just to let you know, Kent did mine, and I've been really, really pleased with it. It's I think what a reverse mortgage does for the average person, and I'm not a young chick anymore. In fact, I'm an older woman, and I'm proud of that. I'm still working, doing my thing, is the most important thing. It gives me and my husband peace of mind. Peace of mind is king when it comes to being our age, because we don't want to be kicked out of our house. We want to live there. We don't have another move in us. So a reverse mortgage for us, man, I can go to bed and sleep at night knowing that I'm going to have my home. All I have to really worry about is making sure I do the homeowner's insurance and pay my taxes, and I'm good to go. And if I want to pay on it, I can. And if I don't want to, I can. If I need a new car, there is equity there that I can take out and have me a new car if I want. So, Kent,
It really is a great program, and it does provide more options than traditional forward mortgages.
Right.
I know when I get to, I don't think I need it at 55, but when I get to 62, I plan on getting a reverse mortgage. A lot of people will have a home equity line of credit, and they'll use that in the event of emergency or if they need cash for something that comes up. Those that experienced the market downturn in 2008 have their home equity line of credits taken away. And with the reverse mortgage, that won't happen. So once you set up a reverse mortgage, even if you don't have a loan, you could have a reverse mortgage with zero balance. And that equity will continue to grow, and you'll be able to utilize that at any time for whatever need, cars, vacations, medical, extra retirement. If you have money in the retirement account and that's going down in value, you don't necessarily want to pull that money out to live on.
No.
You could utilize your equity in your home, and you can pay it off at any time. So just think of it as another resource to help in retirement years for whatever you need. I mean, it's pretty amazing.
Peace of mind.
Peace of mind.
Peace
The
of
best
mind.
thing is peace of mind, right?
Yep.